On behalf of DAM Capital and United Breweries, I welcome you all for Q2FY21 earnings call of United Breweries. From the management side, we have Mr. Berend Oding, CFO of the company, and Mr. Punacha from the investor relations team. I'll hand over the call to Mr. Berend for his opening remarks, and then we can open the call for Q&A session. Over to you, sir.
Thank you, Mayur. Good evening, everybody on the call. Thank you for joining. So today we'll discuss the quarter 2.5 year results of United Breweries. And as I said earlier, I'll start with some opening comments that accompany the slides that were distributed. And after the slides and the comments, I will open it up for questions as usual. So on the key results highlight for Q2. Q2 saw sequential improvement from Q1 volume decline of 77% to a Q2 volume decline of 48%. Q2 continued to be impacted by COVID-related restrictions, but month-by-month improvements were noticed. For example, September volume 10% versus September the prior year. If we look at some of the original challenges that saw improvement, that is the on-trade further opening up, with on-trade, as I said, resuming for the first time in a number of states in September. Original excise duty increases were reduced in Orissa and Andhra. And in West Bengal, they introduced a new excise policy on beer that results in lower consumer prices. With revenue and cost action, the company had a positive bottom line and a gross margin of 16 basis points in the second quarter. Cash flows for the first half were strong, 95 crore free operating cash flow against a negative 45 crore last year. Net debt 7 crore and interest costs were down 20. Next, EBITDA is 53 crore.
Sorry to interrupt, Mr. Berend, your voice is breaking up.
Can you hear now?
Yes, sir. This is a little better, but your voice is breaking up initially. So if you could repeat from the last minute.
Sure. Let me go back a little bit to the results. So I said with revenue and cost section, the company delivered positive bottom line and gross margin up 16 basis points in the second quarter. Cash flows for the first half were strong with results free operating cash flow of 95 crore against the negative 245 crore same period last year. Net debt reduced by 27 crore and interest costs were down 20% for the first half. On the next slide, we show the EBITDA result of quarter 2 at 73 crore and an 8.1% margin. Sequential growth versus Q1 was strong, with EBITDA improving by 167 crore versus the Q1 loss of 94 crore. And all cost lines show decreases. Year-to-date, the impact of Q1 is obviously still having a key impact. EBITDA year-to-date is at minus 21 crore. If you move to the volume performance per region for quarter 2 and year-to-date, that is shown on slide 6, we see North volumes in quarter 2 down by 32%, with recovery driven by Delhi, Rajasthan, UP, and Haryana. In West, the volume decline is 37% due to gradual opening of markets, with Maharashtra on-trade opening for early October. In East, at minus 69%, you see that recovery in Orissa and West Bengal is relatively slow, related to trade restrictions and taxation. In South, at minus 55%, Karnataka and Tamil Nadu performing relatively better, and Karnataka was one of the first states to open on-trade in September. In Telangana, we saw recovery relatively slower, with permit rooms remaining closed as of now. Kerala shows steady improvement. The net sales breakdown is on slide 7, with besides a negative volume impact, the company realized a positive price mix impact due to positive state mix, price increases, and brand mix. The EBITDA breakdown shows the main impact being volume related, which was to a significant extent offset by higher gross margin, reductions in employee costs of 11%, and other expenses of 37%. To point out that as other income is somewhat higher than usually by almost 30 crore, that includes income from a reversal of prior year doubtful debt provision. But this income was more than offset in the quarter by one-offs related to, amongst others, provisions for stock positions and liquidation schemes for products that was at risk of expiry. Q2 is therefore not impacted by positive one-offs net. Slide 9 shows the free operating cash flow results, which was a robust 95 crore for the first half. The decline in operating cash flow was more than offset by improvements in working capital, and further the capital investments were down as well as income tax. Resulting free operating cash flow in the first half was, as a result, 340 crores higher than the same period last year. Turning to the last slide on outlook and summary. The company continues to put health and safety of all staff and stakeholders first. Today, all breweries and functions are operating and fully compliant to COVID-19 protocols. The volatile trajectory of the pandemic results in considerable uncertainty on consumer demand. The company continues to dynamically manage costs and funding, balanced with appropriate brand investments to support our long-term market position, while also actively engaging consumers. UBL is well positioned to navigate current circumstances with a leading market position, strong brand portfolio, and robust balance sheet. The company continues to be optimistic about long-term growth drivers of the industry and is committed to strengthen its market position and driving profitable market penetration. With that, we were happy to take your questions. So, operator, please go ahead.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue settles. The first question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, thanks. And congrats, sir, on sequential improvement and opening up of the bars. My first question is on gross margins. So we have seen spirits companies see severe gross margin pressure both in Q1 and Q2. In your case, you have seen gross margin expansion. So if you could elaborate the key raw materials, how it has been in Q2 and versus YOY, and how do you see the outlook in both the key raw materials?
Sure, thank you for the question. The outlook on key raw materials, one is what we said earlier, barley this season round is trading a bit better in terms of pricing, softening up by around 10% versus prior year. So this is by now slowly finding its way in our cost of goods sold. On bottles, we see low inflationary pressure on new bottles. And for both barley and bottles, I would see a kind of similar outlook for the remainder of the year as they are the key input cost. And I think you have to read that combined with the positive state mix and positive pricing actions that the company took for year to date in the first half. And as a totality, gross margin was therefore up slightly.
So could you elaborate on last bit which you mentioned, how much has been the price hikes and mix change? Any numbers you can put there?
Yeah, in the slide we break it down. So if you compare Q2 to prior year on the prior year's basis, but combined, it's also positive brand mix. But the two main elements contributing to that is the state mix and the pricing increases.
Right. My second question is, you have given beautifully the region-wise comparison. Now, Eastern region has been the slowest. You have pointed that out, and in Q1 also it was worse, and Q2 also it is worse. So, what is the reason for that? Is it because these are anyway the poorer regions of the country, so that has been the reason? Post the cut, how much is the consumer prices lower versus the earlier time?
Yeah, so I think we have to break down that question a little bit state by state because prices and dynamics differ. Maybe to start with West Bengal, I think they have seen quite a number of restrictions from COVID up to recently. Now, per early October, the new access policy for beer has been implemented. Pricing and therefore consumer prices has come down considerably. So for example, Kefir strong 650 is now sold at 130, which was 125 before COVID. So reasonably close in terms of consumer prices pre and post COVID. So therefore, I think in going forward, we would hope to see West Bengal improve the volume growth trajectory. I noticed there was quite a long time trade restrictions. There was also a COVID test, which was rolled back in early July. But in totality, the market has been somewhat slower to take off compared to other markets. There's also quite high products in stock that need to be sold out first. But as we start up those stocks, which is a big for the industry, also there, step by step, we would expect recovery.
And one follow-up here, sir. Bengal rationalization, are you expecting any more states in the near term such a similar step? And what led to this? Was it proactive on your part, on the industry part, or it was just that they have been a bit more considerate given the very weak volume?
Yeah, on the first part of your question, we don't at this point in time foresee other states making policy changes, but obviously that is only the line of sight we have as of now. On West Bengal, we speak to all excise departments on a quite regular basis, so this is something we have been put forward our thoughts. But in the end, it's also the state that obviously decides the right moment and the right way in their minds to change the policy. Here it's good to know, for example, that strong beer and mild beer, there's a differentiation in excise. So yeah, I think that's a positive step. It will not overnight change the whole dynamics, but I think it's a good direction the state is moving to.
It's a last quick question. So Bihar, the elections results will come out soon. And supposing it's an assumption I'm putting, I'm not asking for your view on which party will win. I'm just saying if the new government, new party comes and supposing the prohibition goes away, my simple question is, if the prohibition goes away, how quickly you can respond to the new things in terms of supply? That is the only question I'm asking.
Yeah, we have a brewery in Bihar, as you might know. So as soon as there's indications that prohibition might be lifted, we'll be working with the excise department to resume supply. But that could be a matter of 2 or 3 months, 4 months. It's difficult to say, depending also, of course, on how the excise department itself is organized in terms of trade outlets being organized, policies being available, etc. But obviously, it's something we closely monitor.
Sure. Thank you, sir, and all the best.
Thank you.
Thank you. We'll move on to the next question. That is from the line of Vishal Biraria from Aviva. Please go ahead.
Hi, Brian. Would you have lost market share in this quarter?
On market share, we don't have full line of sight yet for the quarter. But if we look at the corporations that publish the market data, we see a few states where we're in the plus, so Karnataka, Kerala. We also see a few states, Telangana, West Bengal, where we saw more discounted pressure in the market. So in that sense, I would say it's a bit of a mixed picture. But for their states where we thought that some of the more underlying dynamics we need to act upon, that obviously we have done. So going forward, where required, we have put in place mitigating actions at the end of the quarter.
Okay. On the growth that we saw in Karnataka, Goa, Tamil Nadu, would this be for the industry as a whole? And was this because on-trade opened up earlier compared to other states? Or could you elaborate a bit more on this one?
Yeah, it's definitely, for example, in Karnataka, it was state, I think, one of the first out of the blocks to open on-trade by the early days of September. So there's seen a good momentum in the state. Tamil Nadu, we still see some closure of permit rooms there, so it's not fully to, let's say, trade restrictions only. So I would say there are mixed contributors on a state by state, but the overall picture is that we see those trade restrictions being lifted step by step, and that's obviously a big positive. That first you need outlets to open up, then it will take a bit of time before consumers resume their visits, get their confidence back, increases in numbers over time. So it's a gradual recovery from that perspective, but directionally in a good way.
Okay, I'll come back in the queue. Thank you very much.
Thank you. We'll move to the next question. That is on the line of Aditya Soman from Goldman Sachs. Please go ahead.
Hi, good afternoon, and thanks for your presentation. So, firstly, in terms of some of the new products that you launched last year, in Kingfisher Ultra, the wheat beer and the like, have you launched them further in any states? I think it was last launched in Karnataka and Goa. So, any further launch and any sort of indications of when you would look to launch it further, given that markets are now opening up?
Yeah, so on the wheat beer, indeed, the initial launches took place in Karnataka and Goa. We've seen very good consumer traction. In fact, it's been leading the segment for the last 2 quarters, we believe. So that's positive. We're now introducing it in Delhi. Obviously, that kind of launch scale has been impacted by COVID, as we first needed business to normalize before we went to further new launches. But that's definitely now next step we're taking with Delhi, and then subsequently further states where we think the potential is there will follow.
Thanks. So would it be fair to say that you would launch it in at least 3 or 4 states by the end of the year, or you wait and watch depending on how they reopen?
No, I think we'll progressively add more states, and that is, I think, indeed, kind of month by month, further states will be added. So that's, I think, a valid expectation.
Fair enough. And lastly, in terms of online sales, any update on the trajectory? So, have any of the states, have any further states allowed online, or are states scaling that back, and what would be the contributions from that?
Yeah, I think it's still a little bit similar state as we discussed in the Q1 calls. So number of states, it's a bit more advanced. A couple of states in the Northeast, so there you can find some volume online, could be anywhere between 5 to 10%. Other states, due to trade opening up, I think the interest has been a bit more limited in the sense that there was not a big push to start that online. So yeah, I think a couple of states seem to continue. Other states not yet further progression because I think the on-trade opening up has given the opportunities for consumers there.
Thanks. And just one last one. In terms of the off-trade sales, any indication of how many stores have shut down, or what proportion of stores are open at this point compared with, say, last year?
Yeah, probably we would say that at least 95% of off-trade is open. It could, of course, be, but that can happen any year, that some outlets have closed and new ones opened up. But I don't think you can conclude there's a significant drop in the number of off-trade outlets operating in the country. So there might always be a couple of pluses and minuses, but we don't see big drops where we are today.
Thank you. That's very clear.
Sure.
Thank you. We'll move on to the next question. That is on the line of Jatin Chawla from First Voyager. Please go ahead.
Yeah, hi, Ben. First question is...
sorry to interrupt, Mr. Chawla. Sir, your audio is not clear. Sir, can you use the handset more?
Is this better?
Yes, much better. Thank you.
Yeah. So, first question is, I couldn't hear you clearly in your opening remarks. Did you give a number for the volume decline in September?
Yes, we did. So for September, our volume decline was 33%.
Okay. And this has continued to improve in this quarter as well, in terms of October and early start that you see in November?
Yeah, so as we indicate in the communication, we see quite good sequential growth, month-on-month improvement due to some of the restrictions being lifted, etc. So also in October, we saw further recovery. But of course, that is the line of sight kind of we have today. What will happen, subsequently, will depend again a lot on any restrictions, any trajectory of COVID itself. But so far it's an encouraging trend.
And when compared with 1Q, I see that the gap between beer and spirits has widened further. One would have assumed that with a gradual opening up, that gap would kind of start narrowing down. So what do you think are the key reasons for the same, and by when do you see this kind of bridging, or do you think there will be some longer term implications of this as well?
Yeah, I don't see structural changes or reasons why there should be a different growth path, let's say longer term. Obviously, coming out of lockdown and a lot of trade restrictions, we were guided that there is a differential, being, for example, of course, the need to cool beer, which is not the case for spirits, plus the fact that by nature, beer is a bit more bulkier product than spirits. So longer term, I don't see reasons why things should be really structurally different. I think in Q2 there were still quite some impacts of COVID and trade restrictions. But again, by where we are now in early October, I think the situation is looking better. Also, on trade opening up progressively is a plus. So we'll have to see how it goes going forward.
In terms of your off-trade channel, is your off-trade channel now kind of back to pre-COVID levels, or that is also still down?
We don't split out those but I would say that it's getting pretty close to pre-COVID. So from a distribution and availability point of view, that we certainly now cycled. So that is behind us from that part.
And one last question from my side. When I look at Carlsberg's September quarter numbers, for the quarter they had a 30% decline, and in September they spoke about an 18% decline. So it seems they are doing far better. So is there a significant loss of market share, or are there any other reasons kind of for the difference in performance between the two companies?
Yeah, I don't want to comment on what others have put out or what are the backgrounds. I mean, there will always be differences in footprint and relative position in states. I think it's fair to say that trajectory state by state has been very different with off-trade, on-trade, stock positions in the market all playing its role. I think if I look at our brand portfolio, I have no concerns or no areas of weakness where we think we need to take further action at this point in time. So, in that sense, we focus on the recovery for our total portfolio, and we'll be supporting that going forward.
Sorry, one more. In terms of premium versus the mass beer or light versus strong beer, any kind of differential trends? What trends are you seeing in the market?
Punacha, you want to comment on that one?
Yeah. The premium has recovered as the on-premise has opened up. So as Biren was mentioning that the on-premise opened up only towards the latter part of August, and only 1 month of September, which had the complete on-trade operating across the country. So there, the super premium segment has fairly recovered. But however, for the entire quarter, it is as bad as the main segment.
Sure. Thanks a lot.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. If time permits, you can come back in the question queue for a follow-up question. The next question is from the line of Harit Kapoor from Investec. Please go ahead.
Yeah, hi, good afternoon. My question was on the product mix. So you mentioned in your release that, product mix has been positive, but I just wanted to get a better sense. You also mentioned that strong has done better than mild. Also, the off-trade, the on-trade was open for only a month. So, I could just not reconcile the two that, product mix has been positive, but, these two, factors have still played out. So if you could just help me understand that.
When we say product, we say SKU. SKU means a state mix also would work there. And here, states with higher margins and higher NSR have done better than the other states. Thereby, we are having average revenues higher when compared to last year, along with the coupled effect of price increases that we have taken almost across 7-8 major markets.
So, Prata, just to follow up on that is, what would be the price increase component within this 5% price mix that you're seeing?
Yeah, it will be largely mixed because the southern states and more profitable states have recovered faster than the other states. So majority is the state mix. And also you have price mix. We have taken price increases in Karnataka. We have taken price increases in Delhi. We have taken price increases in Kerala, Tamil Nadu, Maharashtra. So in all major markets, we have taken marginal price increases. So there's a double effect.
Got it. And just one question was on the overhead side. So this year has made you guys probably look at all lines of the P&L even sharper. To see where you can kind of extract the savings. I just wanted to understand whether you see some of these savings in the P&L on the overhead cost lines a little more permanent, as compared to, earlier. So what I'm trying to ask is, once the business comes back to normal, do we see some of these savings still sustaining, going forward?
Yeah, definitely. There are, of course, many changes in the market and with consumers due to COVID. So also how we react and how we are organized to respond to that. So there are short-term impacts from COVID, but definitely also we look in the future as to how are we competitively organized and what is appropriate cost level against that. So that's in that mix, we'll manage the company going forward to make sure whatever learnings and new opportunities from COVID are reflected in our cost base and our key processes. And at the same time, if the market continues to open up, we'll also progressively support that with trade programs and activations. So obviously that will also impact the cost base as well.
But Eric, what I was trying to understand is that if you going into next year, once your revenues are kind of back, I know you will have to support it with trade programs, etc. But X these trade promos, etc. Is there a say cost saving that you can see? So, for example, some of the costs that you cut to kind of generate this kind of numbers, would some of them sustain going into next year? Which what I'm trying to understand is X trade promos. Is there a permanent cost saving benefit that you are seeing partly in the overheads as well?
Yeah, so I think we would expect to come out this crisis also from that perspective somewhat stronger. So some costs will not come back. But obviously, we carefully monitor what happens in the market from quarter to quarter, how much we want to support trade program distribution, etc. So that is always the balanced equation. So I cannot kind of put a guidance out there as to what will happen exactly on the cost or margin side. But to your question, we do see opportunities to continue some of these savings going forward.
And the last question was on the stock position side. So, this 43% revenue decline, does it adequately reflect the secondary decline as well, or did we have lower primary sales compared to secondary, or higher primary sales to secondary?
No, I think there's not a huge impact from stock positions going up or going down. So market by market, locally it might be sometimes a plus or minus, but I would think this is a fair reflection of secondary sales as well.
Got it. That's it for me. Thanks and all the best, guys.
Sure.
Thank you. First, shall we move on to the next question? Thank you. The next question is from the line of Jaykumar Doshi from Kotak Institutional Equities. Please go ahead.
Hi, thanks for the opportunity. Hi, Baren. So my first question is on, if you could quantify the quantum of price increases that you've taken, and you mentioned about across 7 to 8 states. How does it sort of translate into at a portfolio level? Second is just curious to understand, the timing of price increase, given that volumes are fairly, yet to recover. And have you seen the competition also take similar price increase? So, that's probably the first question. I have one more, but I'll come back.
Sure. So we don't split out the pricing impacts per state and per brands, but as a kind of guideline, you've seen hopefully the slide where we talk about 5% for the quarter, including state mix. And Punarcha mentioned the number of the states, which includes our largest states where we have taken price on a kind of year to date. And that timing is always subject to local circumstances, but they have been fully implemented by now, so we can see that benefit continue. For example, in Karnataka, we speak about 5 to 10 rupees per bottle, same in Maharashtra. So that kind of level, I think, is indicative for what we've done. As to what has competition done, I would rather refrain from commenting on that. But we all know that the beer market is relatively competitive, so that pricing element is quite key.
Understood. Second question is, you did mention about reduction in tax rates in West Bengal new beer policy. I didn't hear the exact number. So did I hear it correctly that 170 rupee SKU, 650 ml SKU is now at 130 rupees, and prior to COVID it was at 125? Did I hear that correctly?
Yes, that's correct.
Correct. So it's almost close to pre-COVID levels. Now, have they also reduced the taxation on spirits to a similar extent, or it's just this concession is for beer? And is this a temporary thing, and they will sort of again increase it once demand or volumes come back, or you think this will stay?
I would expect the latter. I mean, it would be not very normal to do it as a very short-term measure. So, of course, we have seen a lot of disruptions quite quickly after markets opened from lockdown. But I think all that dust has settled, and as far as I can see in West Bengal, this is a new policy going forward. So I would expect that that supports the volume for the total industry. As to exact increases on spirits, I don't really have that data. I think they implemented that policy a little bit later. So I'll need to come back to you on that.
And on similar lines, can you guide us on AP and Odisha? What are the benefits, if possible, to quantify? I know Odisha is perhaps not that relevant or significant in terms of scale, but AP, and do you see any recovery in volume given that distribution is undergoing a change? So with RTM change, do you think this tax reduction will?
Yeah. So in Orissa, the pre-COVID MRPs for our main SKU was 120. Then due to kind of COVID says it went up to 170, and that has been partly rolled back. So now that pricing is around 140. For AP, I think it's early days. We've seen notification from the excise coming out, citing a couple of negative impacts from their recent measures. So they have rolled back, at least for beer, the excise by some 30 rupees per bottle. So that's an encouraging sign. So let's see where the market is heading there.
Thank you so much. This is helpful. Thank you. That's it from my side.
Thank you. The next question is from the line of Ashit Anil Desai from Emkay Global. Please go ahead.
Yeah. Hi, Darren, Punita. So just one more question on Andhra Pradesh. Have we resumed supplies over there? And if you can quantify the impact that is there in this quarter, and when we expect either the impact to anniversarize or supplies to resume in AP. What's the situation over there?
Yeah, so for Q2, volumes have been very low. So that was kind of unchanged versus the prior months and quarters that we guided earlier. Going forward, it's difficult to tell what will happen. What I said earlier, the little bit of good news is some of the excise levels have come down. So hopefully, the market also somewhat stabilizes and somewhat normalizes. But that, we'll have to see going forward.
Okay. And the retail change, I think, happened in Andhra Pradesh last year in October. So would it be fair to say that the impact would anniversarize from October?
Yes, so last year, October, the main policies got changed, and hence the main impacts occur. So as we move into Q3, that kind of comparable will move out of the base. So in that sense, you're right.
Okay. One last question on Telangana. This is your largest state, but has been the slowest to recover so far. In your view, is pricing affordability a bigger problem, or the on-premise opening has been a challenge over there?
Yeah, it's probably a couple of factors. So I think partly permit rooms are important to open up. Also pricing, I think, has an impact as it was already increased pre-COVID. So yeah, I think that are some of the factors impacting it, and hopefully also there we see it more and more stabilizing. But versus the average picture on the national level, it's slower in recovery than the other states.
Okay, and after AP has reduced prices, is Andhra Pradesh price of beer similar to Telangana now, or it's higher?
It's still higher.
Okay. Yeah, that's it. Thanks and all the best.
Sure.
Thank you. The next question is from the line of Udit Bukaria from Catamaran. Please go ahead.
For taking my question. Sir, I wanted to understand on the volume recovery during the months of September and October, if you can mention how much growth has been in the off-trade channel versus the on-trade channel, and which state has recovered the fastest?
Sure. So in September we saw, what I said earlier, minus 33% volume, and October a bit more.
आपण ज्या व्यक्तीशी बोलत आहात त्यांनी आपला कॉल होल्डवर ठेवला आहे. कृपया लाइन.
Hello?
Yes.
So please go ahead.
Yeah. So in October we saw further recovery. We don't split on-trade versus off-trade. But of course, the on-trade coming back in a number of states is a good support. And then in states that saw the quickest recovery, for example, Karnataka, Goa, also there, those were states that opened on-trade quite quickly, had limited impact from price hikes and the like. So that's the kind of trend that saw them post the best recovery rates.
Yeah. So, sir, one clarification. As you had mentioned previously that on-trade is usually around 1/3. So is it fair to assume that off-trade channel has recovered to pre-COVID levels? And how has it fared versus your expectations?
We previously in calls we have said that the volume share of on-trade is around 20% for us. Of course, that on-trade is not fully recovered as states progressively open on-trade and then for footfalls to come back, etc. That will take some time. We don't split out separately volumes for off-trade in terms of kind of recoveries there. But I would say if you look at the guidance or the communications we've done on state levels, and some performing better and some are a little bit less, it gives you an indication also, I think, as to off-trade's performance. As for some markets, the off-trade is also more or less the full market. And where on-trade opened up, again, to what I said earlier, it will take some time before volumes also to pick up. It will not be in month one, I would say. So that's the within that combination, I think, we see the combined effect.
Understood. And sir, on the CCI update, is there any, like in your assessment, what could be the maximum financial impact from that particular event? If you can share that some number.
No, it's not possible to share the impact. I mean, we've put our responses back to the CCI, and then as stated in our notes, the next step is hearings in December. So we've put our argumentations, our view of how the market is set up, and that will explain and communicate to them. But in terms of any financial impact, if anything, that we cannot share.
And sir, just one last question. Sir, if you can share how has been your advertising spend trajectory for the recent months, and how has the ROI on advertisement been compared to last year?
Yeah, we've seen gradual pickup in A&P. I mean, that's how we've done that as well as the markets continue to open up. So in that sense, we've managed it. I think the ROI are pretty okay. I mean, a lot moved to digital for us. Of course, we have now a big activation with IPL. But our share of voice, our ROIs are on a good, healthy level. So.
Sorry to interrupt, sir. Your voice is breaking up.
Let me repeat the last part if this is audible. So going forward, the next 2 quarters, we'll expect more and more activities to take place, not only from us, but also other industry participants. So, yeah, the ROIs going forward we'll have to see. But so far, I would say they've been good.
Yeah, thanks a lot, sir.
Sure.
Thank you. The next question is on the line of Himanshu Shah from Dollars Capital. Please go ahead.
Thanks, sir. Thanks for the opportunity. So just a couple of questions. One, this quarter or
Sorry
other
to
income.
interrupt, Mr. Shah. We are not able to hear you clearly.
Hello. Is it better?
So slightly better. Please go ahead.
Yeah. So this quarter, other income has been quite high. Anything specific over there?
Yes, as we indicated when I presented the introductory slide, so we had a reversal of prior year provision for doubtful debt booked in the other income.
Okay, so reversal of doubtful debt. Fair enough, sir. And so, sir, capex during the first half has been quite low, around. So, can you provide a guidance for full year with respect to capex?
Yeah, I would expect that to be around this run rate. So we booked 95 crore for the first half, so approximately a figure of 200 crore for the full year.
Okay. So, and last with respect to West Bengal policy change, so is there any change in our net realization also? Has that also gone down, or it's just a reduction in excise duty?
Yeah, there is a change in the whole value chain overseas, but we think on an NC level, on that contribution level, we don't see it negative to our contribution.
We don't see at NC level anything, any significant change.
That's correct.
Okay. And lastly, sir, on the used bottle part, are we receiving now used bottle in similar proportion to pre-COVID level, or is there any material shift on that front?
Yeah, we've seen markets coming out of recovery and hence returns also to took a bit of time to establish themselves. But generally, of course, the higher the volume, the better those cycles get restored. So at the moment, we are at similar levels at pre-COVID for returns of bottles.
Okay, sir. Thank you. That's it from my side. And all the best.
Thank you.
Thank you. The next question is from the line of Giriraj Daga from KM Visaria Family Trust. Please go ahead.
Hello, team. My question is related to capex. So what I want to understand is that, like, what is our capacity utilization number? Where will we put that?
If I understood you correctly, your question is on capacity extension?
Utilization. So how much we are utilizing, let's say in FY20? Not currently, I understand we are running low on volume, but what is our FY20 utilization?
65%.
Sorry, I missed that number.
65%.
65%. So my question is, like, how will the capex play out over the next 2-3 years? Since last 2 years we had done a good capex of 400 crore plus. This year also we are investing 200 crore. Those we are running low on volume. So how the next 2-3 years numbers will look like? Do we need to do a capex to add capacity now? Or will we do a capex holiday for next 2 years and we are running on only maintenance capex?
There are two types of capex. One is, like you said, maintenance capex, and the other is also statutory capex, which with respect to environmental norms, which we have to do. Other than that, which is discretionary, which is towards expansion of capacity as such, that is currently on hold. As you know, we have sufficient capacity. And even in a regular running year, considering seasonality, we can maximum go up to 85%. So ideally, if you have to operate, you operate somewhere between 75 to 85. So last year, we had sufficient capacity, talk about 19-20. We closed the year around 65%. So we have sufficient capacity as of now.
Okay. Just to follow up there, so what out of the total capex of rupees 400 crore last 2 years, how much is the maintenance capex and how much is statutory capex? You can bifurcate that.
Maintenance capex will be anywhere between 50 to 80 crores. That's it.
Okay.
And after that, in the first half, we also completed a number of expansion projects that were initiated and to a large extent executed before COVID hit. So you will see some carryover of those projects into this year's numbers.
Okay. And how much is statutory capex every year?
That depends based on change in the statutes and environmental norms.
Any rough number, last 2 years number, if you can give me, so I can understand the trend?
Very small. That is very small. It will be anywhere between 30 to 50 crores max.
Okay. Thanks a lot.
Thank you. We'll move on to the next question. That is on the line of Sanjay Satpathy from Ampersand Capital. Please go ahead.
Thanks for the elaborate update. Can I just ask one thing which you might have explained, that what kind of volume decline or growth, whatever we can see in December quarter?
So we don't guide the coming quarter as to volume, But in summary,
I'm just asking whether it will still be a decline quarter, like when the industry demand will go back to positive, even if it's not for UB, for the industry. Just want to understand when it will go to positive territory.
Yeah, that is something we don't put out there, but we guided that September was -33%. From there on, we've seen some further recovery, but how that will pan out November, December, etc. I think that's quite uncertain to guide on.
Understood. And does it depend mainly on trade, that is the restaurant restricted to open up, or something more?
So the restrictions we see today mainly relate to on-trade. Yeah.
Understood. Thanks a lot, sir.
Sure.
Thank you. The next question is from the line of Krishnan Sambamurthy from Motilal Oswal Securities. Please go ahead.
Thanks, Varun. In Maharashtra, the on-trade channel opened in the first week of October. I would have assumed that the trade would have wound down the inventory by then. So would you have witnessed a significant bump up, albeit temporary, in terms of them restocking their inventory?
Yeah, so in general, you see some further recovery. I think Mumbai itself remained a bit more subdued, but the rest of Maharashtra, which is a bigger share in the market for us, we see some better recovery due to also on-trade opening up. Yes.
Okay, and did this bump up happen towards the last week of September or the first couple of weeks of October?
No, the on-trade opened, if I'm not incorrect, October 5th, more or less. So that was.
But the October. Demand in anticipation of the opening up, did it happen towards the end of September, or was it towards the earlier part of October?
No, that would not have been the end of September.
Okay. And again, while we understand that bars and restaurants are still operating at 50% seating capacity, are you anywhere close to that level in terms of your sales on the on-trade channel, or do you think that recovery is a very gradual process?
I think there will be more of a gradual process because first the legislation has to be such that on-trade can open, then outlets need to organize themselves with the working capital, and any outstanding stocks need to flow. Consumers need to, step by step, gain that confidence to go back and meet up and go out. So, yeah, I don't think that's a 1 month time frame.
Okay. And any of the large states where the recovery on premise is at a fairly significant level, or is it largely a gradual recovery across the country?
It's mainly the latter. Yes.
Okay. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you, everybody, for attending. Thank you for your interest and the question. If any questions left unanswered, please approach myself or Panachan. We're happy to engage with you and follow up on that. And with that, I wish you all a good day and a good evening. Thank you.